Alright guys, welcome back to Bite the Book Trading Review. Again, today we're looking at the S&P 500 micro. This guy is an amazing pair to trade, but can be very dangerous. You can lose a lot of money. As you know, the micro is a tenth of the E-MINI. So every tick that this moves, instead of $12.50, it would be $1.25 per contract. So let's begin. We're gonna look at August 2nd, that trading day. So again, as always, we'll start at our hourly, and then we'll work our way down. Okay, there we are, right over here. Hourly, and then again, work our way down. So let's just try to sketch this based off of the after hours, because there's not much really happening. We got that, and then also we got this over here too. I'm not looking at this area yet because, you know, when you're looking at the day, right, you wouldn't have that information available to you. So this is really your last low that you have. So now there's not much after this. You know, I guess we have hit this here too, but again, I wouldn't see that until after we get to it. But anyway, let's continue on to our 30-minute. So on 30-minute again, 8:30 comes, or yeah, 9:30 my time, which is 8:30 Chicago time comes, and there's a massive push to the downside. We close below the last low, so that's a good indication that price should continue moving down again. And then there's also mad rejection up here too. Like this wick on the 30 that we made was a $16 wick. Wow. I think you probably could have scalped a move up there as well too, but it'll be really risky, especially after, you know, a candle like this. I'd probably get faked out here, where I expect it to come move all the way up, but then, you know, it comes back down to break even for whatever reason. So now I think this is as far as the structure goes. Let's look at the 15. For the 15, we got, you know, same type of structure here. Again, we still have that same wick. Price moved really quickly just before open, right? Because this is at 9 o'clock, which is 8 o'clock Chicago time, and then 9:15, and then 9:30 is when it pushed and closed below the structure. So the 15-minute, there's also a little, you know, a little retest here as well too, just from the wick, from looking at the 15-minute. So that's the open. We create a low here, so you probably might not be buying here, depending on the type of trader you are. You may have bought just based off of the candle close without a wick, and then price moved back up. You know, over here taking sales would be very risky, only because, again, if you're looking at a 250 stop loss, right? Let's say you decided to take the sells up here, just because you have structure over here, you might have been stopped out, but then, you know, now you have a new lower high that you can work with. So let's say you took it off of this candle for whatever reason, you would have been perfectly fine. For me in this market, I'll probably be looking for sells just because of the direction that we're going, right, and the momentum, right? We're moving down, so it would make the most sense to take sells. So let's continue this. We get to 3:30, which is 2:30. I probably wouldn't be trading. I'd be on lunch at this time, right? Support becomes resistance, right, where we broke out, and then boom, continues all the way back down. But again, this is after hours, right? Depending on how big your account is, you may be holding trades after hours, you may not be. And this trade had the potential to turn into a, you know, a really big trade. But anyway, if you did take that, you had a $22 range, depending on who you are, again, right? Because again, even all between here, the only risk you had was when it got to here, right? If you didn't take it after the 15-minute close, you probably would have been stopped out just because of how this thing moved. This wick right here is about $7. Now let's look at the 5-minute. 5-minute again would be the same story, right? Except the structure would be a little bit different. So on our 5-minute, right, we do have a close above that resistance that was created, right? And then as this closes, this wick is never filled, right? So again, there's that rejection. We come all the way down, and then again we get our closes and then our retest after the break, which again is very, very important, right? Depending on how you place your resistance lines and support lines, you'll see the retest or you may not. This is only placed here because of how I looked at it on the hourly. On the hourly, right, I placed it just in between these wicks and when near the closes. So again, it really depends on how it's placed. So now back to the 5-minute. Again, the best opportunity we had was once it broke out and there was a retest. Over here, depending on the type of trade you are, you may have taken buys over here and probably 100% would have lost because, you know, it just kept going down. But once you realize that and wait, right, and become patient with where the market's going, then you would have realized that again it would continue down. As far as how low it would go, I think there weren't too many options, right? Because there's really nothing here. Like, this is pretty much no man's land. So we're on our way down, right? Like, you can't tell me that we're not going down if you see something like this, right? Anyway, this is a day, like, it's really just mainly those sells that you could have taken. Again, biggest thing would have been 10 o'clock, taking the sells, or even at 9, but you need a big stop loss because this wick is huge, huge. $13. All right, thanks again for listening. Next few videos I'll definitely be dropping just more about my strategy, how I look at techs, and just, you know, risk management, psychology, my psychology especially, right, as a trader, as a failing trader, because, you know, we're all in this together. Some days are good, some days are bad, but all in this together. And like I always say, risk on, guys. Bye.